Hello, everyone, and welcome to the HUBB U.S. Market Update Live. We welcome to the show Rob Roy, the Chief Market Strategist at Elliott Wave Options. Welcome to the show, Rob.
Thanks, Scott. Glad to be here. Thanks for having me.
It's our pleasure, and we're so happy to have you. Now, Rob uses HUBB software platform, which is the charting software you'll see during his analysis, and you can check that out at hubb.com, which is linked below in the description. We're going to cover the major US markets and what a week it's been in markets, from Powell in Washington earlier this week, jobs numbers, and the amazing implosion of Silicon Valley Bank. Rob is going to look into the S&P charts, VIX, the Dow, Qs, interest rates, the dollar, and some interesting company moves as well from the week. We're sure that you're going to have some questions, and Rob's going to be here at the end to do some Q&A with you as well. So don't be afraid to get those questions in as we're going through the show, and I'll run through them at the end. Before we get started, don't forget to click on those subscribe and like buttons that are right below here, because it all helps and helps us build a great channel for you all. And by the way, as soon as the live stream has finished, we'll enable the chapters feature on YouTube so that you can skip to whichever markets or stocks that you're interested in. All right, Rob, let's jump into it. What are you going to show us first off?
Well, I thought we'd start with the S&P, and as you know, Elliott Wave is a big thing of what we do here at Elliott Wave Options. And the most aspect of note is we had this 5-wave pattern to the upside here, and then from here we have actually gone to the point where we've adjusted. Sorry, I reach around here so I can see the screen. You can see that we had a 5-wave pattern to the upside. It's now relabeled. So the 5-wave pattern to the upside is no longer there. And I think that's something that's of extreme importance when you have an Elliott Wave pattern that relabels or changes, or in this case, delabels, you will, then what normally happens as the previous impulse move retraces, which means, and we're kind of on our way there, we're likely coming down here to this 380 level for a test of support. And if that doesn't hold, then we're probably coming down here to the 360 level. So pretty ugly day the last couple of days. It's interesting because last night during our insiders meeting at ewotrader.com, we had a subscriber ask, do you think that maybe the market, because there was a big reversal, we talked about that a lot in yesterday's trade, the market was moving to the upside, and then intraday it moved to the downside and finished on the lows. You think the jobs numbers was leaked? Well, now we know with the whole Silicon Valley Bank debacle, what happened. And apparently that news was getting out prior to the market close. And that's what leaked out, or what some people were aware of. And we closed on the lows. And then we had all the headlines last night. I think it's important to note that this is a huge bank. This is not some little community bank somewhere. They started off with venture capitalists. That's how they got their start in Silicon Valley. So they were funding venture capitalists. They all deposited their money there, and when the companies did well, they grew. But they moved into more traditional banking, and then they tried to raise capital and they couldn't. And that's where the implosion is coming in. And then Janet Yellen comes out today and says, yeah, it's not good about the SVB thing, but we're also monitoring a few other banks. And that is really scary. Are we headed to something along the lines of the global financial crisis part 2? It's a really difficult time for the market. And so I like to look at the 10-day moving average, and you can see from where we are, we got awfully far away from it. One of my Robisms, as they are, is no security in any time frame is very far away from the 10-day moving average. And you can see that on the low today, that's pretty good separation for a market as large as the SPY. And so we were able to rebound and close on the high, but we're still well below that 10-day moving average. And when we bring volume into the mix, we'll look at the VIX as well, because I know a lot of people are interested with volatility. But when we bring volume in, you can see that we did have pretty substantial volume yesterday, less volume today. So big volume on the down move, and with the recovery move, less volume. That all looks pretty bearish to me. And I think Janet Yellen making those comments, it could have been viewed as a one-off on the whole SVB thing. But when you start bringing in that, hey, we're monitoring other banks as well, that's That's scary. There was a headline out that all venture capitalists should be running to take their money out of SVB, and a run on the banks, right? Nothing panics markets more than the scare of a run on banks. I just think that the news is really bearish, and the whole thing has changed now. What we were looking at, we had this upward pattern. We also had this zigzag pattern, which we're big fans of at LA Wave Options here, using this the HUBB software here. We have a great look at the zigzag patterns, one of my favorite LA Wave patterns. We had that potential 100% extension up to 436. That looked like where we were going. That's where the previous wave 5 was forecasted as well. And now you can see the 61.8% fib level has held as resistance. We came down, tested the 38.2% level. That's all good. Okay, we can bounce from here. We broke that. That means that we're likely retracing this entire move. That brings us down to 380. Can we hold there, or are we going down to 360? I think the important thing to note here is the world has unbelievably flipped from where we were looking at a couple of days ago to where we are today. And you mentioned, Scott, talking about Chairman Powell's comments and the Federal Reserve, and Chairman Powell talking about, well, we may have to raise rates a little bit further. The Fed Fund futures has moved the forecast from 5 to 5.25% to 5.75% is where the Fed Fund futures are saying that we need to go. And I was surmising, I wasn't aware of the SVP news during the day yesterday. I became aware of it after the close yesterday, but was 50 basis points enough to warrant that massive reversal that we had on huge volume yesterday? Clearly not. But a scare in the financial networks, yeah, that's a whole different animal. And so, breaking to the downside.
Well, it leaves a lot of questions out there for investors, right? It's like, well, does this stop the rate hikes or put a pause on the rate hikes?
People then talking that. Right. And that's a great point, Scott, because we're now dependent on the Federal Reserve. They've got to save us. So there's calls. You may have seen some of the news on the financial networks that some people in Wall Street are calling for a bailout. SVP coincidentally had one of those bailouts back in the original GFC. And so they paid it back in a very short period of time. And apparently they're not going to get one now, but some people on Wall Street were calling for the government to bail them out again. Are there other banks? Are we going to have some Lehman Brothers? Oh man, it's just, there is so much uncertainty. And I think that's the key word you're alluding to, Scott, is now there's so much uncertainty in the markets, and the markets hate uncertainty. They can deal with a lot, but this unknown factor that we have right now of what's going on behind the scenes, it's pretty scary. I've changed my tune completely here from cautiously bullish to now, holy cow, it could get really ugly.
Yeah, it's just definitely a scary environment on that front. It's, you and I have been in the finance markets for a long time, and usually when investors have doubts or don't really have a clear picture, they push the sell button.
Absolutely.
And you can't blame them right now. What about other charts to look at? The interest rates and the dollar. Do you want to have a look at those?
All right. Well, can we look at interest rates first?
Of course.
Bring up the chart of interest rates. The dollar's okay. The dollar hasn't been hurt. But what I wanted to show really here is the fact that the interest rates have dropped significantly. How is that when we have Chairman Powell testifying that we may have to raise rates further, but then rates have this kind of a drop? You see a drop like this in rates, you would have thought we'd had a massive rally today. And that didn't play out. Again, I've talked about this so often to our subscribers that the bond market is key, and you can't discount what's going on in the bond market. This inverted yield curve that's had the longest time of inversion in history, one of the most severe inversions that we've ever had. And everybody's saying, oh, well, it's different this time. And I always say it's never different this time. Something is behind the scenes and we have to figure out what's going on. Well, now we're starting to get some answers to that on why that is occurring. And when you see this drop in rates like this, what that's telling you is everyone is running into the bond market. Prices go up, yields and rates go down. So we know the Federal Reserve is going to raise rates further than we thought. that should have been a tick up in rates. They started yesterday with this move to the downside here, and then this big drop. That means money is flocking into the bond market. That's not good. When money leaves the equities market and goes into the bond market for safety, less liquidity, less buying power in the equities market, all that is just very negative. So I think this is really something of significance to note here as well. And note that there is no five-wave pattern here on interest rates. So we're in a corrective phase. We had this impulse move here. And where does this correction go? What are we doing here? Is it going to come all the way back down? Is it going to be a flat? Are we going to consolidate into a triangle, which I think is probably the most hopeful scenario at this point? We could retrace and have a zigzag pattern to the upside, but all this financial news stuff, I don't see that playing out either. So really concerned about what the bond market is sharing with us. The bond market is larger than the equities market. There's a lot of smart people in the bond market. You have to pay attention to what's going on. And I've been sounding this alarm for so long with all these people saying that the inverted yield curve is wrong this time, or it's different this time. And, you have to be concerned about it. And now we're getting some answers after all this confusion.
It's going to make for a very interesting weekend, because I think we're going to see a lot of news come out over the weekend, and brings back some nightmares of 2008 when I was working at Merrill Lynch as well. But probably worse for Lehman and Bear Stearns people.
Yeah, and that's the fear, isn't it, Scott? That a whole, what is going to come out? Clearly, Janet Yellen was trying to slowly, let the market know that SVB might not be the only one. That's the way. Why else would she make a comment like that? Why else would she say they're monitoring other banks if they don't know already that there's banks in trouble, that there's other banks in trouble? So yeah, over the weekend, we could get more headlines. We could get more news of other additional banks that are in trouble. And just, boy, you're talking about 2008 is that's scary stuff.
All right, before we move on to the next part here, just once again, just reminding everyone, don't forget to click on that little subscribe button below. At HUBB.com, guys, have got some great stuff, and then you should be paying attention to all of it. So let's move into like the stock side of it. And I think you wanted to talk about the Fang stocks, right?
I did. And, there's an old adage in the markets that the generals are it's kind of a military analogy, right? But the generals are the last to fall. And there has been some commentary in the financial markets that the Fang stocks, the old Fang stocks that were leading the market, was a small part of the market that had been doing really well. So I thought it was apropos for us to look at the Fang stocks today and see how they're doing, because if we lose them, it's all over. Not just because they're the Fang stocks, because the market had broadened out on the previous rally before the Fed embarked on this hawkish rate hike campaign, but they had been leading again. And so that was a kind of a move towards a risk on. The Fed fund futures had been forecasting a 50 basis point rate cut by the end of this year. That was moved out by the data that you mentioned, Scott, on the jobs data had been moved out, as well as inflationary data to early next year. And then we had Powell's testimony, and that moved it out a little bit further, that the Fed fund futures are pricing in 5.75% as a likely move. So everything is moving a bit forward as far as where we could go. So with this news, and now knowing that we have concerns about the financial sector from banks failing, I thought it would be appropriate to take a look at those Fang stocks, and let's see what's going on. So
let's check check out the HUBB software and see what you've got there for us.
Yeah. So, and it's a fantastic program, as you mentioned before. HUBB.com for this is the best LA Wave software. I'm a huge LA Wave fan, been trading it since 2001. It is the best LA Wave software on the market that I'm aware of. And the reason I say that, because I've tried all the ones that I know to.
We've got a little bit of a freeze there for Rob right now. I'm sure we'll be coming back on one second.
The LA Wave algo is programmed exactly to Elliot's algorithm. There's no individual adaptations of the Elliott wave algorithm here. It's pure Elliott wave. But anyway, sorry, didn't mean to digress there, but getting to the, when you don't have Facebook anymore for the F of Fang, we have Meta. And honestly, Meta has held in there okay. So we're sitting here and we're all right here. Not too much concern as far as Meta. But then if we take a look at Apple, hanging in there as well around the 150 level, the note here is that it is in a qualified 5-wave to the downside pattern here, and that's of concern. But holding above 150 is key. I've drawn a line there, support resistance. You can clearly see how it was support back in September, became resistance in October and November, even into December, fell down. We broke back above it there in February, tested it, broke up and a little bit below it in early March, got back above it, and now we're sitting right on top of it. So far, I guess if we look at these two parts of the Fang, no harm, no foul at this point. Here's Amazon. And it's holding at 90, which is where it needs to hold. But note also, it is in a 5-wave to the downside pattern as well. So are these going to hold? That's the key. These levels that I use the analogy a lot of, a climber with his fingers on the cliff trying to hold on. And it gets to the point where it's just too much and you fall. And that's the scary part of these stocks. So if you're looking for some sort of glimmer, and we don't want to be too doom and gloom here, it's that these Fang stocks, at least to this part, are doing okay. Well, then we bring up Netflix. That's not so good, right, Scott? I mean, that's not the kind of pattern that you're looking for. If you're bullish, it had this really terrific run. They had surpassed numbers, even though they haven't gone out of the subscriber sharing, haven't gone after them yet, if you will, and their numbers were better for subscribers. Why is this tanking like this? You would think that, okay, they did better than expected, and they haven't even come to bring all the people that are not illegally, because they're allowing it, but so much of the login sharing that occurs with Netflix, and they haven't gone after those people yet. So you're thinking this could really take off. Wait, when they get all those people that have to start paying that have been watching Netflix off somebody else's account. But why is this tanking like that? So that's a point of concern. You look at the 10-day moving average, it's almost a vertical move to the downside there. And it looks to me like with this wave 5 here, that's in place. We have some support down here around 280. I think that's probably where we're headed on Netflix. Can that hold? Elliott wave rules would tell you that when a wave 5 ends, that we're going to retrace back to the previous 4. So that means we're probably coming all the way down here towards 260. It's hard to understand why that would be playing out this way if it isn't that some of the big boys are starting to say, hey, let's lighten up on some of these positions. So we bring volume in. It hasn't occurred yet. This move to the downside has been on lower than average volume. That red line is the 200-day moving average of volume. So we haven't had massive volume selling yet, but nobody's buying either. So this is the way you look at this. When you have a move to the downside like this, which is below average volume, it's a buyer's strike. Nobody's wanting to step in, but they were back in January. What's changed there? That one's a hard one to identify. And then we look at Google that had that big move to the upside there, also not in a current 5-wave pattern. So what this is telling you is the Elliott wave algorithm is unsure of anything to the upside. There's nothing. I mean, we did have a 5-wave pattern to the upside in the S&P. That's been taken away. That's unlabeled, if you will. And now we have Google. And when we look at this, Google has to hold here at 90, in my opinion. And if it doesn't, then we're down here. 85 has some support of probably going back to retest that wave 5 low. But watch this, Scott. Check this out. If somehow Google can't hold here in this area, look at this. This is one of the phrases that I like to use, and our subscribers have gotten a kick out of it, is Katie bar the door. I mean, there's nothing to stop Google if it can't stay within this range here between 85 and 90. If it doesn't hold there, then who knows where Google could go. And I think a lot of people would agree if Google tanks like that. Yeah, Scary
It's like me
indeed.
jumping in the deep end of a pool. I just don't know when I'm coming back up.
Exactly. Yeah, jumping in the pool with lead boots on. So yeah,
Wow.
there's the Fang stocks, and you know, a couple of them still hang in there. So there's a glimmer of hope. It's not all doom and gloom. There's a glimmer of hope. But boy, have things changed in the last couple of days.
Well, listen, thank you so much for that breakdown. And like, once again, like, great technology with Hub breaking this all down. But there's one name that you and I have had a few different chats about and so forth. And I want to have a look at Tesla. Can you have a look at Tesla for me?
Absolutely. Yeah, you and the whole world wants to look at Tesla. I mean, we can never do we can never do a live event without somebody asking about Tesla. And unfortunately, that's in a qualified 5 wave to the downside pattern as well. And it's well constructed. We went up, we hit that wave floor right there at 55%. So call it between the 50, 61.8% fib levels, tons of resistance there. If it could have gotten above that, Tesla could have really run. In fact, if we would have broken above that level, I think we would have likely gone to look at testing those highs around 300. It didn't. This resistance held. We're churning to the downside here. I know you know, everyone, not everyone, but a great deal of people love Tesla. It's one of the most loved stocks out there. I'm glad you asked about it. And we've broken below the 50-day moving average here with a qualified 5 wave to the downside pattern, breaking the 50-day moving average. This one looks pretty scary to me as well. Look at what happened here, Scott, from where we had this wave 3 low. That was just a straight march to the upside. When you have that, when you break support, which we did at 200, where is the support or resistance on the way down? It doesn't exist. It's like a vacuum here. And so it could be, and we may upset a lot of people here, but you know, the charts are the charts, heading back down towards that 120 level. That looks pretty scary too.
You're not painting a very rosy picture for us, Rob, that's for sure.
And I'm a positive person, Scott. I mean, I'm normally really positive, and I have been on the positive side of what could happen in the markets. But that financial news is bringing a lot of old scars back to people. Yeah, I mean, you know as well as anyone with your background on you know, some of the memories of that the great financial crisis. And you know, I'm not trying to say that's where we are, but it certainly brings that question up of if we are.
Well, actually, it's interesting you bring up question, because you and I feel like we're going to do this a lot, go a little bit overtime on what we wanted to do, but we're going to go into the Q&A side of it. And once again, before we jump into that, click that subscribe button. It's very easy. It's just one little click, and the like buttons too. One of the questions that have come in here on Tesla, it's Maddie's actually coming in saying Tesla looks scary as well as far as the market's concerned. Is 120 your doomsday level?
I don't think 120, well, I guess moving down to 120, I don't think is doomsday, because it looks like that's probably what's going to happen. I think a break of 120, that's doomsday. That's you know, the Katie bar the door stuff. We're headed. Look where that wave 5 forecast is. Can you imagine Tesla down around $50 or $60? Even the top of this is called a tap box time and price projection. Even the top end of it is around 70. That's pretty scary. So a break of 120, yeah, that's pretty doomsday. You want to look at something really doomsday, Scott? How about that? There's your XLF. There's the financial sector. So with what we're talking about, with you know, the SVP and Janet Yellen talking about potential other banks, it seems like the ETF that tracks the financial sector is pretty concerned about something. Can it get any uglier than that? Look at, I mean, just in the last couple of trading days, scary stuff.
That's disastrous. That's very scary. I was actually going to personally ask a question, like to bring up the XLF, the ETF on that front. So you and I are on the same wavelength.
Well, it's a great question. I mean, a well thought out question, and you know, with your financial background, you're aware that this could be a precursor, or you know, it could have been all right, let's rub a little salt on the wounds. It's just an outlier with SVB, and everything else is going to be okay. Doesn't look that way from that chart, does it, Scott?
No, it's not painting a very pretty picture at all. It's I'm not going to sleep easy this weekend, Rob. Now,
sorry about that. Didn't mean to. I'm just not normally a negative person. I always try to look at the positive side of things, but there's not a whole lot. I'm
so
trying
you
to.
can bring up a chart like on the very quickly and so forth, right? So people coming in with
Sure.
different stocks. Someone's asking a question here on gold. Now, obviously,
Oh, that's a great question, because watch what happened with gold today, and this goes into what happened with bonds. Look at that spike in gold, where gold had been tracking back to the downside, and it looked like we tried to make a run here. I was pretty excited about a bid in gold. Where could we go? And then that reversed and came back down. But look at that gap up today and that big move higher. Normally, you would think, all right, well, that means that rates are probably going to come down. But with money flying into the bond market today out of fear, I think, where else do you go? Gold, right? I mean, that's one of the safe havens, and that certainly bore that out. Just a massive difference in what we'd seen in the chart of gold. So that's the outstanding question. Unfortunately, that big move up in gold is not a positive from a risk standpoint. It's more of a, all right, we're going to go park our money in gold until we figure out more of what's going on here.
And one last question before we sign off here for today. What do you think of Bitcoin?
Bitcoin. So I'll bring the chart up of Bitcoin. It's trading right around this 20,000 level. I talked to our subscribers about this because we look at it every week in our insiders meeting, but you can see that we have this move to the upside here, and Bitcoin had moved in 4,000 blocks. So it had been at 16,000, it moved up to 20,000, and then it got up to 24,000. So there's the 20,000 level. And then we'd moved up to 24, and it looked like we're going to try to make a run at the next level, which is 28. You can see it right over here. I'll draw a line right there. There was a support there at 28. So trying to break above it, but it couldn't hold it. There was never a follow through day. We talk a lot about when you have a break of a major moving average, support, resistance, break out of a triangle, etc. One day can be a head fake. You have to have that second day, a follow through, a confirmation day, and it never occurred in Bitcoin. And so I was commenting that moving to the downside here, talked about it in our TradeFinder meeting on Tuesday night, that the fact that we had broke down, we do TradeFinder every Tuesday night, by the way, it's free. We talk about the markets, we talk about trade ideas, and we do a live Q&A there as well. That the potential of moving back down to 20,000 was very real, with the fact that we couldn't hold 24. We took a look there at maybe breaking to 28. We couldn't hold it. So my commentary was, we're probably going down to 20,000. I didn't think it was going to be a move like this. But we're currently, at the time that we're doing this recording, we're trading just under 20,000, 19 and change, right underneath that level. If we can't hold this 20,000 level, then here we come right back down to 16, and that's the next block of 4. And when you look at a move like that, if we look at the 10-day moving average, okay, there's pretty good separation there. Perhaps we get some consolidation, maybe even a little bit of a bounce. But if we don't hold 20,000, I think it's a quick move back down to 16, because when we broke up from 16, it was pretty vertical, as I just drew that arrow there. And again, that means that there's nothing to hold it, nothing to stop it on the way back down. And it's kind of scary there.
Well, listen, we'll put a link into TradeFinder in the description below for people as well, so they can track that as well.
Awesome. That'd be great. Thanks. We love to have everybody. I mean, we have a great time. They have great questions, and bring up some good stocks, and we find, trade ideas for everybody and talk to markets. So it's a great time.
Okay. Well, listen, for everyone, we hope you've enjoyed today's show, and make sure you go check out HUBB.com. Let's move it along, because we're at that 5:30 level. We're trying to get everyone so they can get to their weekend.
Yeah, I'm sorry, Scott. I'm just trying to figure out what part they would have enjoyed out of this. I'm sorry, I didn't mean to interrupt you, but
that's okay. But listen, once again, everyone, go check out HUBB.com. You're going to learn more about their charting software, and that Rob's been using today. And Rob, you go have a great weekend, okay? We'll look forward to talking to you next week.
Thanks, you as well, Scott. Thanks a lot. Have a great evening.
And everyone else out there.